everyone, I wanted to do this particular video today. Look, again, you guys keep flooding me with phone calls and emails, and for this particular week, it seems to be on the topic of investing over in America. And I think it's because the dollar's hit parity, that you're all kind of seeing opportunities. The market is being flooded by spruikers, spruiking property, spruiking investing in the US. And so a lot of you are coming to me saying, Helen, what do you think? What are your thoughts around that? You know, you get some great cash flow, and look, the dollar is at parity, so it would be a good buying time. As a result of all of that, you know, here are my thoughts on all of that. At the end of the day, if you have investment properties here in Australia and you've built your buffer and you've created your financial freedom, then exploring opportunities in the US is a great thing. I'm okay with that, because you've built your portfolio, you've built your wealth here in Australia, and you've got control of it. Whereas if you're a new investor and you're hearing a lot of these spruikers about investing in the US, and you're thinking, great, I want to get into the market, let's start with the US. Well, in my view, I personally see that as the highest risk there is with property investing, okay? I see that as a higher risk than investing in mining towns, okay? Now, the reason why I see that as a higher risk is because, firstly, you know, it's an unknown quantity. You know, you don't know what the market is like up there, and I know that there are property spruikers saying how the US is the next best thing. Well, let me put it to you this way. When you look at a country and you look at our government and you look at our debt levels, well, for us here in Australia, our debt level is 6% of GDP. Whereas when you compare that with the US and with all that they've gone through and are still going through at the moment, their debt levels is 80%, 80% of GDP. Doesn't that in itself kind of raise an alarm bell for you? Now, of all the investors I know and that I've met over the years, I have not met an investor who has successfully invested in the US market. The only people I know of that have achieved great wealth in the US are the spruikers themselves, okay? Alternatively, for those that may have family in the US, that may have lived in the US and have some great connections over there, they have done well because they've got that relationship and they've got an understanding of the market. But for you and I that have no knowledge of the US market or very little, to go and invest over there is high risk. Now, a couple of things that really concern me about the US market as well is I understand that property prices have plummeted and what have you, but the US market is a long time away from recovery. Now, I know there are a few little reports saying that things are shifting, but there are so many people unemployed, there is so much poverty over there, that to go and invest, you are investing in a high-risk area where who knows if your tenant can afford to pay you the rent. You know, and in some areas of the US, property managers actually go and collect the rent personally, you know, cash or check. And I've heard stories of property managers carrying guns with them in case they get robbed. It's a bit of an unusual system that they have over there. Even though they are such an advanced country technologically, they're a little bit backward when it comes to their property management and their whole sales process. So unless you fully understand how the US market works and operates, and you can clearly, as a worst case scenario, manage to survive financially if you lost your dough, if you burnt your dough over there, will that take food off your table? Will that impact your lifestyle? If the answer is no, then sure, go over there, do what you can, explore the risks, and you know, put an exit strategy in place. But if you can't afford to lose the 100, 200, 300,000, then don't go there. That's my tip for you. I hope you heed the advice. Alternatively, do your due diligence thoroughly and make sure that it's the right investment for you.